of our revenues comes from export market, with a sizable share coming alone from China market, which is one of the most competitive market globally. We enjoy meaningful gross margins of about 68%, despite of the high inflation, the logistics problem, and all these scenarios which are currently prevailing. Our sales are typically derived out of three key segments. One is performance chemicals, which comprises 70% of our sales, which comes out of MEHQ, BHA. Pharma segments, which comprises about 15-16 odd percent, which comes from glycol and DCC. And third important segment is FMCG chemicals, which comprises of about roughly 14% of our sales. Besides creating innovative chemical processes, our value chain is backward integrated to basic commodity chemicals, including phenol, methanol, acetic anhydride, cyclohexylamine, to name a few. Differentiated process and backward integration ensures that our gross margins remains resilient. The testimony to this competitive advantage is our healthy gross margins, which are at 68% despite of key raw material prices increasing by over 60% compared to pre-COVID levels. As a strategic move, and this quarter particularly has been a very consolidation phase for us, where we have not passed all the raw material prices increase to our customers. This, I believe, has given us a very high goodwill with our customers, who in the coming financial years will give us a higher wallet share of their requirements. Our endeavor is to be a premier partner of choice for our customers. ESG, of course, is one of the most important criteria in this company. Our entire processes are designed looking at cleaner and environment clean processes. To also ascertain this, we are undergoing a very high certification body called as the Green Co. Very few companies in India have been certified by this certification. As you must not be aware, but Green Co evaluates commitment of the company towards environment friendliness. It basically determines the amount of carbon dioxide emitted per metric ton of chemical products produced by any organization. We estimate this certification should be completed by H1FY23. On CAPEX, CAPEX is underway towards our Unit 3, which we are expanding our current existing products line by about 50% and adding very new range of products called as HALS, HALS, which signifies hindered amine light stabilizer. To this end, we have entered into an agreement to acquire 34 acres of plot, which is Unit 4, for our greenfield CAPEX. This is the largest CAPEX till date for the company. During the first half, FY22, we have incurred a CAPEX of about 75 odd crores, and the CAPEX commitment continues to be strong with over 100 crores annually, and all has been done with internal accruals. A little bit on HALS for the newcomers. HALS stands for Hindered Amine Light Stabilizer. It's a new series which we are launching. It finds application in diverse industries, including water treatment, paint industry, master batches, polymerization inhibitor, etc., etc. We would be the first Indian company to manufacture HALS in the domestic market. The global market size for HALS is estimated to be about $1 billion and growing at about 7 to 8% CAGR. And we endeavor to be key player in this segment within the next 3 to 4 years of our launch. To give a little light on the quarterly quarter 2 FY22, we reported highest ever revenue of about 153 crore, which is 9% higher than the last year quarter 2. Despite steep increase in input prices, the raw material prices, logistic prices, power and utility like coal prices, are still gross margins and PBT margins remains at 68 and 47% respectively, with PAT of about 54 odd crores. Balance sheet, of course, continues to be debt-free with a cash balance of approximately 275 crores. On the outlook, our company is undergoing a consolidation phase wherein sizable CAPEX is underway towards existing and new products. We will continue to follow a prudent policy about capital expenditure program and cash management every year. We see sustainable growth environment in our business by introduction of new products and planned capacity expansion. We are confident that our focus on our process innovation, backward integration, and operational excellence will help us navigate through the inflationary cost environment. The company is always working towards increasing its global presence by expanding its markets into newer geographies, business segments, and product portfolio. So this is all from my side, and I am now open for any questions and answers you guys might have.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. So our first question from Mr. Rohit Nagraj from Emkay Global Financial Services. Please go ahead, sir.
Thanks for the opportunity, and congrats on different set of numbers which will be challenging environment. So the first question, as you mentioned in your opening remarks, that we have not completely passed on the price increases, which has probably given our a goodwill to the customers. Do you see that we will be passing it on given the incessant rise in the raw material cost still underway, and probably the cost will reduce only after next few months, and that will probably help in terms of Q3 and Q4 margin. So you are outlook on the same.
Absolutely, absolutely. So what happened is, let me explain you. So generally our future, the next year contracts of any company start in the month of October, November, December time. And Q2 for us was very important to prove to our customers that despite of very high increase in our raw material prices, we are not being over aggressive and passing everything to them. It gives them that confidence that, because obviously as we are going down to the end user, the prices of end products have not been, even my end customers are not being able to increase prices of their end product as much as we are able to increase. So everybody in the value chain is trying to absorb a little cost. And this has helped us in gaining some of the good contracts in the coming years, and of course has given a good confidence to our customers. But going forward, the new contracts which will come in place will have these price increase incorporated in it.
Right, got it. And that's good to know that we'll have the ability to pass on in the subsequent quarter. Now, the second question is in terms of the capex commitment that we have. So we have new land parcel for the greenfield capex. In terms of this new land parcel, how much of capex commitment can be accommodated over the next few years? This is just from the perspective that our land bank or our facilities are located adjacent to each other right now, and whether we will be looking at some other places eventually when we'll outgrow the current size. So from a 3 to 5 year vision perspective. Thank you.
Yeah. So right now, of course, I think you are asking questions pertaining to Unit 4, which is about 34 odd acres. One of the reasons of selecting similar MIDC area is our ability, all the local issues, understanding the labor problems in that particular locality, and because of our key proximity to our offices, it gives us a very good handle when these units are closer to each other. So that is one very big advantage we see. We were very fortunate to get a very good piece of 34 acre of land. It is not taken from the government, but it is acquired from Samrat Paper Mill. So the discussions have been going on, but finally it got concluded. That is number 2. Number 3, I think this 34 acres will come up after, the capex could be over approximately over 300 crores. In the first, so of course, it will be phase-wise, phase 1, phase 2, phase 3. As and when new products also come online, these will be incorporated because 34 acre of land is a very large parcels of land. But the phase 1, which we are very confident will have about 150, 175 odd crores of capex. And phase 2, I think, will also be in similar range. And then phase 3 will come when we have more products which will come out of our R&D.
Right. Thanks. And then just one last clarification, if I may. Could you just explain a little bit more on our R&D initiatives and in terms of our R&D bandwidth, investment into it? Probably we want to set up a new separate R&D facility, given that our focus has been predominantly on technology and our own processes spent. Thank you.
Absolutely. So R&D has been a very, very key parameter for the organization. I directly look into the R&D of the company. We have currently 2 R&Ds, and the third new R&D is going to begin. It's already started. I think we just did the puja on Dussehra, and the new boys are joining it, and we will have a new segment of R&D coming up there. That is 3. In R&D, we are specifically focusing on 3 very large categories. One is a stabilizer, where entire focus is given on this HAL segment because it comprises a variety of products. So like we have already done some of them like 701, 770, 622. There are more coming up like 944, 2020, 111, 119. So all these products are looked after as an inhibitor segment. Number 2 segment my R&D guys are working on is intermediates for agro and intermediates for pharmaceuticals, which is what we have already been doing. So there is another segment of people which are working on this, and of course one segment is already working on existing business lines where we are trying to further increase yield, efficiency, and processes of our existing businesses which are currently working on.
Right. Got it. Thank you so much and best of luck. I will come back in the queue.
Thank you so much.
Thank you, sir. Our next question from Mr. Ankur Jain from Future Investments Private Limited. Please go ahead, sir. Our next question from Mr. Ankur Jain from Future Investments Private Limited. Please go ahead, sir.
Hi. Thank you so much for taking my question. My question is with respect to your R&D. So what kind of products are we looking to manufacture in the next 3 to 5 years?
So R&D, what we do is, Ankurji, is that, I'm sorry. So for us, the most important is not on the segments, but we particularly put emphasis on process innovation. So we look at a particular molecule, which is, say, where India is dependent predominantly on China or where imports are coming from other parts of the world. And we try and figure out if we can come up with a better, cleaner, innovative processes, which is what we have done over the past 15 years. So to give you a reference, this HAL series which we have come up with, it is a very complex chemistry where we are starting with the most simplest raw material, namely acetone and ammonia, which are both less than $1. And we are going to make the entire segment of HALs, which comprises of several products ranging from $7 to $15. So it's a multiple step processes which we have involved. I'm sorry. Similarly, on pharma intermediates and agro intermediates, also similar thought process is used where we try and see if we are able to come up with better processes. Hence, we are able to convince the customers to switch to us compared to the existing suppliers out there.
Okay, thank you, sir. My second question is with respect to the gross margins. So, as you said, you are not passed on the gross margins completely. So, right. Are we looking at the gross margins coming back to what they were in the previous quarters in the coming year?
Absolutely. Because see, some of the factors, let me explain, that even during Q1 and Q2, there was steep increase in raw material prices, which was really unthought of. I mean, power issues like coal. Coal in itself ran up 17% over the last 2 quarters, which was absolutely unbelievable for us. Hence, it was very difficult to anticipate these situations and keep passing the prices to the customer, because we generally, want to be not a supplier. We keep changing the contract as the price keep revising. So if a contract is taken, we would like to respect that contract. But going forward, now these scenarios are evident globally that these are the problems which everybody is facing, and hence even the customer is now understood, and even they are willing to discuss new prices with us.
Okay, sir. Thank you so much, and all the best.
Thank you. Thank you.
Thank you, sir. Our next question from Alisha Mahawala from Envision Capital Management.
Hi, sir. Good evening, and thank you for taking my question. So my first question is, what is your current capacity utilization level?
So, hi, Alisha. Across performance chemical segment, the capacity utilization is in the range of 70%, MEHQ being higher, followed by BHA. Second is pharma chemical segment, where Concall's capacity utilization is again close to 70-odd%. BCC is slowly ramping up. It's in the range of around 25-odd%. And last segment is FMCG, where format utilization is in the range of 65 to 70.
Okay. And so last quarter you mentioned that in FMCG chemicals for one of our products you were seeing some demand contraction. Has that normalized, or are we continuing to witness that?
So last quarter, I think we saw some improvements. I'm really hoping that quarter 3 and quarter 2 should be better, unless there is some major lockdown which happens, because the product of FMCG 4-methoxyacetophenone goes into cosmetic, like a sunscreen product. So sunscreen is majorly a product which people would apply on vacation when they are, going out in the sun, tan, all those things. So that segment is a little disturbed right now, but for Q2 and Q3, we've seen reasonable demand coming back. But the only hope is that there shouldn't any other lockdown should come up again. Otherwise, I think that segment should come up very well again.
Sure. And just to clarify, the capex that we're incurring is only for Unit 4. There's no other capex that we're currently looking at, correct?
No, we are also doing capex in existing Unit 3, right? So there are 2 capex happening simultaneously. I mean, capex in Unit 4 will basically begin after March, once we get environment clearance. Till then, we are only buying the land. Okay, so advance of about 10 crore is paid to the owner, and balance will be paid on due diligence. And capex right now is happening in existing Unit 3.
Okay. So what is the capex we're doing in Unit 3? The amount, the quantum?
So 75 crore almost ho gaya hai, and we are anticipating additional, total would be around 100-ish. So around 30 crore more would be done in the over 6 to 7 months time.
Okay. And this all will be ready for use by end of the year?
So it is coming up in phase-wise plans. So some of the plant will start in December, some are starting in March, April, some will start in September.
Okay.
So different products, different lines. Yeah.
And this is where we're expanding 50% of our capacity for existing products plus doing the new HAL.
Absolutely. Perfect.
Okay. And then in Unit 4, that is something I think you will define later once the EC is in place, or have we defined what is the kind of capex we're looking to do?
So basically the balance has, because HALS, as I mentioned, is a series of products. Right now we are coming up with only 2. In Unit 4, additional 5 will come up. And some pharma intermediates which we have already been successful in lab will also come up in Unit 4. This is planned for my phase 1 of about 150 odd crores.
And if we start construction
June 23.
April, June 23 is when the plant will be ready?
Hopefully, yes.
Okay, understood. Okay. And can we expect asset turns for the capex we're doing in Unit 3, the 100 crores to be similar to what we're currently doing? 2.5 I believe is our asset turn currently.
You can estimate 3-ish.
Sorry?
3.
3. Okay, understood. And just one last question. If I see our current run rate, while I do understand the challenges that we are facing, but it's not because of any contraction in demand, we're running slightly short of the kind of annual growth that we historically used to show. So are we expecting H2 to be stronger?
Yes.
Or H2 will be?
The reason is, one of the major reason is Q2 also had a lot of shipping issues, logistics problem. Same was in Q1. Q2 was also similarly bad. But now in Q3, at least we are not seeing those issues as we had seen in Q1 and Q2. So my real thought remains that Q3 and Q4 should be better than H1.
Got it. And just one last question, if I may. What is the kind of price hikes that we've taken in this quarter or in H1?
So it depends on product to product.
Sorry?
It depends on product to product, but similar, the price range has been increased from 3 to 8%, 3 to 10%.
In H1?
In Q2 ending, and these results will be seen in Q3.
Okay. Okay, great. Thank you. I'll get back in the queue. Thank you, sir.
Thank you. Yeah.
Thank you, sir. The next question from Mr. Ritesh Gupta from Kotak Securities. Please go ahead, sir.
Yeah, hi. Thanks for taking my question, and congratulations for the great listing and kind of reasonably well managing the profitability well. I think I had a question in terms of the new capacities that were coming up for your products, for your core products, and when does that get commissioned, the volume expansion for your core products. And the second part is that if I understood you correctly, and I can kind of rechecking what you said so far, that you have already taken price hikes, and from quarter 3 onwards, you would go back to your old gross margins. Is that a correct understanding?
So Ritesh, let me answer your first question. So the capacity expansion should start, the plan should begin by March, April 22. That is question 1. Answer to your question 2 is, if the raw material remains at these levels, then yes, we have given price hike. But tomorrow, there is further price increase happens. Okay? Then again, the margins would be at similar levels. Because today it is very difficult for me to sit and predict, because over last quarter to this quarter, say for instance, phenol for that matter, grew by 13%. Okay? Tertiary butanol grew 25%. This has been absolutely abnormal. I have not seen this situation over the last 13, 14 years where quarter on quarter prices are increasing by 25%. Okay? If the situation, I believe, is now going to get better, things should start stabilizing, then of course the margins build-up will start happening again to the earlier levels. However, I still anticipate that the RMC prices should still be closer to 30-odd%, which in quarter 2 is 31.7%.
Got it. So this, I mean, the price hikes are already taken into account whatever sharp increase in gold prices that we saw in the month of September and probably later on, and probably some of the others that where we saw a sharp increase towards the end of quarter 2 and probably beginning of quarter 3 as well. All that is being
Absolutely.
Okay. And the next one is that one of your competition has been ramping up their capacities and their volumes. Have you seen any increase in competitive intensity, etc. so far, or you haven't seen any kind of volume related issues, etc.?
I can only tell you that we are running reasonably full capacities, and I think Q3 and Q4 remain strong for us.
Okay, that's it. Thanks, Doug. Thank you so much.
Thanks, Ritesh.
Thank you, sir. So our next question from Mr. Srinivas Iyer from Rockfort Consultancy. Please go ahead, sir.
Good evening, sir. I have 2 questions. One is, you mentioned that capacity utilization is 70%. Why it is not fully utilized, and when we are expanding the capacity, why existing capacity is not fully utilized?
So, sir, optimal utilization levels would be in the range of 80-odd%. to stretch level at the 85% levels. And we are expanding capacities only in those products where the utilization levels are optimal. So for instance, in FMCG chemical segments, we are not planning to add any additional capacities for now.
Okay. Second question. In the last conference call, you mentioned that environment clearance will be available by January, but this time you are telling by March.
Right.
What are the reasons why it is getting delayed?
No, it is not getting delayed. Unit 4 earlier was planned on 17 acres. But after getting that land from MIDC, we found this 34-acre piece of land, and we thought it is far more better for us for future expansion. Hence, the 17-acre will be sold out, and all ECs will now be done on 34-acre. And hence, because the new address has come up, so the new process of EC has begun.
Okay. I understand. Thank you.
Thank you.
Thank you, sir. The next question from Mr. Sai Kumar from Vigneshwara Consultancy. Please go ahead, sir.
Yeah, hello.
Hello. Tell me, sir.
Am I audible?
Absolutely.
Yes. Yeah. Thank you for accepting that. So I had a doubt in antiretroviral APIs. So can you give us some idea how the pharma chemicals has impacted? Like there is a degrowth. However, there is demand in the pharma antiretroviral APIs. So can you give us some guidance on how it will be affected further?
So antiretrovirals, the drugs which we make, typically go for treatment of herpes and HIV-related infections. And I think because of lockdown, people are not traveling, and this infection spreads are not happening, and hence antiretroviral markets are a little slower than in general what they were. That is reason one. Reason two is that across the world, every pharma company is still focusing on COVID and COVID-related vaccines and COVID-related drugs. So the emphasis on validation of a new vendor in a different space is not their priority as of now. But I think over the next 6 to 8 months' time, we'll get approved at many other pharma companies, and there will be a substantial growth in this business.
Okay, got it. So I had one more question. So how is the acetic anhydride effect in the revenue growth, revenue after increasing the price hike last quarter and this quarter? There is a decrement, right? So how did it affect, and will there be any possibility of incremental or decremental? Just a guidance, it's not a forward-looking statement. Just we need some idea.
So acetic anhydride is so dependent on acetic acid, which is dependent on methanol.
Yes.
And this has been extremely volatile for the past 1 year. I mean, I have been seeing volatility in prices of acetic anhydride since January. Last month, suddenly methanol prices touched almost 50 rupees. And today, as we speak, it is at 40 rupees. So these prices of acetic anhydride is not very static even at the moment. And hence, it will be very difficult to really anticipate whether tomorrow the prices of acetic anhydride will go down or will it go up again. So we have taken an average price and quoted our customers based on that, and the business is happening based on that. But tomorrow, if prices further go up by 25%, it will be detrimental. But if prices come down by 20%, it will be beneficial for us for the existing contract.
Okay, got it. So I had one more doubt regarding the product discovery recently in HALS, endodamine light stabilizers.
Yeah.
Hello. Yeah. So I need how the growth in that segment has happened recently after the releasing the statement of discovery of the product. How the growth in that segment?
So growth in that segment is we are still on lab and pilot scale. The construction is going to begin for one of the plants, or just started construction, and the plant will in itself start by June or July 22. And that is when the commercial production of these products will begin.
Okay. Got it.
Thank you.
Thank you.
Thank you.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and one on your telephone keypad. Our next question from Mr. Keshav Kumar from Raxan Investors. Please go ahead, sir.
Hi, good evening, sir. Thanks a lot for taking my question. Sir, I just have one very broad-based question. This year, the Nobel Prize for Chemistry was awarded for developing a tool for building asymmetric organocatalysts.
Organometallic synthesis, right.
Yeah. So, sir, could this come as a deterrent for our company and reduce the cost arbitrage that we have, or could we benefit, or should it not have any material impact?
I see asymmetric synthesis, organometallic chemistries have been very popular already. But these chemistries are used where molecules are extremely expensive. For the range of segments which we operate, these segments do not, organometallic catalyst costs are so expensive that products which we manufacture in the range of $5 to $10, these organometallic catalysts cannot be used. These are used for very high chiral compounds or very high, high priced molecules. So it has absolutely zero impact on any of our businesses.
Sure, sir. That's all from me. Thank you.
Thank you, sir. The next question from Mr. Rajiv Parekh from Excel Securities. Please go ahead, sir. The next question from Mr. Rajiv Parekh from Excel Securities. Please go ahead, sir. So there's no response from the number. We'll move on to the next person. The question comes from Mr. Sanjay Goradia from VEC Investments. Please go ahead, sir.
Hello. Thank you for taking my question. My first question is regarding the revenue mix by geography. Could you throw some color on how we, had a substantial improvement in revenue to China? So if you just throw some color on what led to this and where do we see this going forward?
So China has been a very, very interesting territory and a very interesting geography for us. And I think this quarter our sales to China has been closely 42%. And China has been a very, very favorable market for us. The demand is very, very strong in China, very, very robust. And we only see volumes growth happening in that part of the geography as well.
But that would primarily pertain to performance chemicals that we are looking at growth?
Performance chemical is one of the major criteria. We export all the products to China, but yes, performance chemical has been the largest amongst them.
And going forward, do we maintain a similar mix, or we see this even increasing from here?
No. I think it should be closer to 38-40 odd %.
Okay. Thank you. My second question will be on the balance sheet. Wanted to understand. So we are now sitting at close to 60 crores cash, and we've seen improvement in the working capital. Do we take this now to be the new steady state working capital? Do we see further improvements, and any thought on how are we going to be utilizing the cash?
So the cash utilization strategy, as we've already mentioned, very long. First is, as a strategic call, we would like to maintain 1x of PAT on cash on board. So besides that, then it will be CapEx which is already underway. We would also like to continue on some strategic investments which will help us moderate our operating expenses, like we have done in past towards solar. And dividend is, of course, as committed during the IPO time.
Okay. Thank you. Just one last sort of small piece of suggestion. If if we could always also have maybe some of the key products that we're operating in, if you could have kind of a market size in the presentation, that will also be very helpful.
Sure.
Thank you. I'll come back in the queue.
Thank you.
Thank you, sir. Our next question from Mr. Rohit Nagraj from Emkay Global Financial Services. Please go ahead, sir.
Thanks for the follow-up. So for the existing set of products, I understand that our byproducts is water, and so probably the requirement from effluent treatment perspective would be relatively minimal. But in the next set of products which we are developing and which are currently under our development phase, do we need a good amount of ETP plants and environmental aspect which needs to be taken care of, and which will again have investments going into it, and probably will go in for very kind of plants in the next phase of our CapEx? Thank you.
So primarily our focus is again on developing very cleaner processes, number one. Number two, we anyways get permission for building ZLDs. Kurkumbh is a landlocked area, and the permission given by NPCB to us is always for a ZLD. And all the plans and all the ETP expansions which we do are with keeping in mind that nothing can be discharged outside of our factory premises. So the water is regenerated back, the salts are sold in the market, and whatever is there has to be utilized in-house or has to be sold out.
Right, got it. And in terms of the scale-up of HALS business, how do you foresee it over the next, say, 3 to 5 years? You indicated that probably will start sometime by mid-calendar year 22. How do we see in terms of maybe growth rate or potential revenue profile over the next 3 to 5 years? Thank you.
So, we are first starting with two HALS. One is 701, 770. 701 is a predominantly export market, whereas 770 is a domestic market totally, because India is importing close to 3,000 tons of 770, and we would be manufacturing less than 1,500 or 1,500 odd tons. So that we would be only looking at domestic market, and for 701 it will be export markets.
Okay, and this is the initial phase of starting, and then eventually we'll add more products to the TTI.
We'll add more products and we'll add more capacities to the existing as well.
And normally, what is the optimum time that we look at from utilizing the capacity?
Typically, I think it should take good 1 year to get approvals at all major accounts within India and abroad. So, say year 1, you can anticipate 30 to 40% capacity utilization. Year 2 should be 40 to 60, and year 3 should be 60 to 75. So 3 years is a very good number, 1,000 day when you start a plan to reach. Of course, if your price, quality, everything is in line, 1,000-day program to get a significant market share is what I assume.
Got it. Thanks, and that's it.
Thank you, sir. Our next question from Mr. Ankur Jain from Future Investments Private Limited. Please go ahead, sir.
Thanks for taking my question. I just wanted to know what kind of market share are we looking to capture in the HAL series? As you said, it's a $1 billion market, right? Market size, right? So, what sort of market share do we see next 3 to 5 years?
So, in 5 years, I think we should be aiming at 10% market share, which is a very good market share.
I didn't get you.
10%. 10, 10.
10%. Okay. Thank you.
Thank you, sir. The next question from Mr. Anand Sarkar. He's an individual investor. Please go ahead, sir.
Hi, my questions are already answered. Thank you.
Thank you, sir. The next question from Mr. Sukant Krish is an individual investor. Please go ahead, sir.
Hello. Yeah, thanks for giving this opportunity. And since some of my questions are already answered, so related to the Halls product, how we can command the margins? Like once we started manufacturing the Halls product, will there be a margin increase or decrease will happen? And what is the margin we command for the Halls product? And the product, is it already integrated with our existing chemistry, or entirely we are procuring new raw materials? That is the question.
So one of the raw material is known, but I mean both the raw materials we are buying for some other product, but that is not really meaningful because these are very basic commodity chemicals like acetone and ammonia. The margins built up typically we have seen happens when the capacity utilization optimization happens, and when a plant is built up, as and when we keep operating the plant for 2 or 3 years, the competitiveness becomes much better. The yield efficiencies keep improving over the period of time. So we might start with a reasonable margins to begin with, but I am very, very confident that as we keep moving on, with better efficiencies, better operational yields, the margins built up will keep happening.
Okay, sir. So, same question like related to the Halls product. So, for anisole, we have the unique manufacturing process, right? The vaporization technology, so that we are the low-cost producer among the whole world. So, similarly for Halls, do we have any unique technology, or we have any unique technology in the across that?
So here, one of the key producer of this series, what we are doing is BASF globally. Honestly, it is very difficult for us to identify what process they are using, what are their yields and what are their efficiencies. But the process which we have developed, I think, is one of a very superior process. And of course, because our operations are in India versus the plant with BASF operates in Italy. So I personally believe that our manpower, our overall expenses should be better compared to a global player like BASF.
Okay, sir. So in that case, are we not going to patent this also, like the vapor technology?
No, sir.
Okay.
No, sir. We will not patent.
Okay. Thank you. Is there any reason or?
So patenting is the same problem as I keep mentioning, that you have to divulge so much information that,
Thank you, sir.
Thank you.
So our next question from Mr. Roshan Nair from Equentis Wealth Advisory. Please go ahead, sir.
Yeah, thanks for the opportunity. Majority of my questions has been answered. So just one question. So how much do we of MEHQ we consume in-house to forward integrate to BHA?
Closer to 70, 80 tons is something which we consume ourselves per month.
Okay. And rest is sold in the markets, right?
Absolutely.
Yeah, thanks a lot.
Thank you, sir. The next question from Mr. Rajashekhar MS. He's an individual investor. Please go ahead, sir.
Yeah, good afternoon, sir. In your commentary, you just mentioned that you have utilized capacity up to 70%, and the optimum capacity utilization is about 85%. So suppose if you have to expand, if you get more orders, will you be able to cater with the existing capacity, or there will be a bottleneck?
Sorry, could you repeat your question?
In your commentary, you just mentioned that you have already utilized 70% of your capacity.
Right.
Optimum capacity utilization is about 85%. Suppose if we get more orders, if we have to cater to more of the customers, will there be a bottleneck in the next quarter or two?
Not in 2 quarters, because our new capacities will start by March. So after that plant startup, there will be absolutely no problem. And tomorrow, if we get very, very large, which I don't believe it should happen, I think it shouldn't be a very big bottleneck right now.
Okay, that's right. And my second question is, you told that you follow to develop a product, you follow a new process, an excellent process. With that, and after that, you will go to the customer for convincing him to take the product from you. In that case, is your pricing of the product coming down with your new process, or how is it that you convince the customer? On what basis you convince the customer?
Pricing is the major criteria, and of course, if better pricing is coupled with green, clean process, that gives a definite, very large impact to customer.
Okay.
Because he starts believing that that you will be a sustainable supplier. If there are pollution problems happening, you will not be the first one the government would ask to shut their plant.
Correct. And the second thing is, your process and technology is all unique to yours. That's why you don't want to divulge. So that if you have to file a patent, you need to divulge a lot of things. Same case with your R&D personnel. You need to retain your R&D personnel. They should not move out because the knowledge, the repository of knowledge is with them. How are you retaining your personnel, or is there any churn on the R&D front?
So in R&D, a lot of raw materials have been still in coded forms, and we have managed our R&D in a fashion that all steps are not happening in one particular lab.
Oh, okay. Okay, right. Thank you, sir. And then my last question is, how much of cash you have in hand now?
275 crores.
Okay. Thank you very much. All the best, sir. Thank you.
Thank you, sir.
Thank you, sir. Our next question from Mr. Nitin Gandhi from IKFIS Trade Capital Private Limited. Please go ahead, sir.
So, as you said, third year could be the best, or maybe the fourth year will be the peak revenue potential which you will be able to exploit based on all the expansion which you have then planned. So what could be the best potential case revenue based on your existing plans and money which you have staked out for CapEx, including 75 crore now and 30-50 crore in H2 and whatever phase 4?
I think typically once all these plants operate, which should touch a top line of 800-900 odd crores.
I thought it will be a little higher because your existing is 600 at 75% and at 85% best case scenario it could become around 750. And your existing 100 crore capex will give another 3-ish, so 1050 and plus HL.
No, in this 100 includes HL.
Okay.
100 includes HL. Yes, one part of HL is included.
All right. So my best case scenario is 1050 crore.
It is better to say less and deliver more. 800-900 बोलने का 1000 आ गया तो अच्छा है. तो बोनस है 100 आपको.
I'm saying delivery. I'm saying peak potential. I'm just taking the peak potential.
वो peak potential भी आप 800-900 पकड़िए. तो 1000 आ गया तो आपको और मेरे को दोनों को लौट गया.
Right. So that means you will need whatever cash flow generation you will start generating from 23-24. You will need to have another big expansion ready to meet whatever is cash flow is generated, right? Approximately 50 crore.
Of course, इसलिए तो 34 acre of land is purchased so that we can do much better expansion and bigger expansion, and we don't have to wait every time for ECs and government and procurement of land.
Okay. Thank you.
Yes.
Thank you, sir. The next question from Mr. Nishant Reddy. He's an individual investor. Please go ahead, sir.
Hi. My question is already covered. Thanks for taking it.
Thank you, sir. Our next question from Mr. Faisal Hawa from HG Hawa and Company. Please go ahead, sir.
I just want to know that, what is the kind of Q&A that takes place within our board, as to where to put the...
Sorry, we couldn't hear you. Please.
Can you hear me now?
हाँ.
I just want to know what is the kind of to and fro that takes place within our board as to where to really put our capex into. Because I mean that's probably the only thing which could ship any kind of danger into the company strategy. Some investment into a product.
Sir, can't hear you at all. Can't hear you.
Can you hear me now?
आपका आवाज बहुत blur हो रहा है.
If you could please come closer to the mic, Faisal sir.
I'll do that. Can you hear me now?
Yes, sir.
Faisal sir, just speaking, we're not able to hear you, sir. So, shall we take the next question in the meanwhile?
We'll
take
the
next
question. Yes.
Thank you, sir. So, the next question from Mr. Kartikeya Yakili. He's an individual investor. Please go ahead, sir.
Hi, sir. Thanks for the opportunity. So, I have one question. So, after 3 to 4 years, like when all the capex is done and everything is ready, would the current margins sustain?
Sir, if I only start looking at chemical products where margins are 50%, then probably I cannot do anything. So the answer to your question is that our focus is that we should always keep a very healthy ROCE, and I think our ultimate goal is to maintain an ROCE of 50% minimum.
Okay. Sounds good.
Thank you.
Thank you, sir. And the next question from Mr. Tejas Seth. He's an individual investor. Please go ahead, sir.
Good evening, sir.
Yes, sir.
Hello. Yeah.
Tell me, sir.
Last year in September quarter, our top line was around 480 crores.
Sorry?
In this last year, in the same quarter, our top line was around 480 crores.
No, sir, some it's mistake. Not 480 crores. Last quarter was 138, I think.
Yes, 139 crores.
139, बराबर.
Hello?
Yes, 139.
But what was our revenue on last quarter, sir? Last year for September quarter?
139 crores.
Quarter 2 FY21 was 139 crores.
Okay. Then I am mistaken from that. And for in your DRHP, you have mentioned that you will be coming up in the fragrance chemicals as well. The new products will be in the stabilizers and in the fragrance chemicals as well.
Stabilizer, I know. Fragrance, not really.
Okay. In the DRHP, the four segments that you have mentioned, new products will be coming. One, the HAIS has come from the stabilizer. And there are other 3 segments as well, out of fragrance chemicals and agrochemicals.
Not fragrance, because we are not into making any perfumery chemicals. We make raw material we might be making, which go into making perfumery chemicals.
Okay. And you said in the last Concall that H2 will be much better than H1. Mr. Parth has said that H2 will be much better than H1. Do you see the same happening as of now?
Because the only logical answer I have is that because the shipping problems are now seem to be getting better. So sales will not be impacted because of shipping problems, which we saw majorly happening in Q1 and Q2. Where we couldn't take businesses because of unavailability of shipments.
Okay. And any guidance, how much percentage improvement can we see?
I think it should be better. If these shipping problems, I mean, as it appears to me that will get better and better, then I think even our H2 should be better than H1.
Okay. Thank you, sir.
Thank you so much, sir.
Thank you, sir. Ladies and gentlemen, that would be the last question for the call. I would now like to hand over the floor to Mr. Siddharth Sikchi for closing comments. Please go ahead, sir.
So first of all, thank you all for taking time out and to listening to us and to understanding how the company is going forward and how the quarter results are. I also appreciate all the questions being asked. I hope I have been able to answer most of the questions as expected by the audience. And of course, to mention a little bit again, as I think the major concerns remain again with the increasing raw material prices and the increasing problems with shipments and logistics, which I think should get better in the H2 of FY22. And with this, I would like to conclude my call and my discussion. Thank you so much, all of you. Thank you so much, Axis team. Thank you so much, Ankur, for organizing it. And thank you so much, Namita, for doing all this. Thank you so much, guys. Have a good one.
Thank you.
Thank you,
sir.
Yeah.
Thank you, sir. Ladies and gentlemen, with this, we conclude our conference call for today. Thank you for your participation and for using Doorsabha's conference call service. You may all disconnect your lines now. Thank you and have a good evening, everyone.